What's going on, guys? Today is April 2nd. It's about 11 p.m. here on the East Coast, and we're making another video. We're in a new month. This video was going to be pretty lengthy. We were going to spend some time taking a look back at the month of March, all the calls we made, all the technical analysis leading up to those calls, from mid-February and on, but I decided it's not going to be that lengthy, and I feel like the 80 or so viewers that I garnish have been with me for quite a while, and they're pretty familiar with the calls that I make and my technical analysis approach. So if you're new here, I do apologize. It's not going to be as lengthy as I thought it would be, but I do invite you to watch my previous videos. Scroll back on my Twitter profile. You can actually go to my profile, type in one of the tickers with the dollar symbol, so NVDA, MSFT, Meta, Microsoft, Netflix, etc. And you can just search my tweets for those tickers, and you can take a look back at my tweets from the month of March if you're really that interested in the calls that I made. We will briefly go over them, but I'm not going to go into great detail. It's a lot of work, and I already put in a lot of work day in and day out. Setting up these videos for you, giving you intraday updates in the Discord and on Twitter. And I spent a lot of time organizing my thoughts in my own mind day in and day out. I also work a full-time job, so it's a lot of work, and I don't have that much mental space right now to go back in great detail and look at every single call. But we'll do our best here. So first thing is first. Friday, March 31st was the day that brought everything full circle on the S&P. We hit the weekly target for March 31st, the end of month, well, not the end of month target. End of month target was 413.75, 1.618. We came short of it by, what did we close at? 409.60 or something. So we came short of it about $5, but we did hit the weekly target. If you remember, on March 23rd, I entered 406 strike calls on the S&P, and there were a lot of naysayers. Some people called them donations. I was in a bit of a competition with my friend Nick Pantano. He quoted me in a tweet, and it was a bit of a competition to see where we would end up by the end of March. We came out on top. By the end of the day, those 406 strike calls that we entered on the 23rd went up over 200%. I did sell them partially. I sold 5 early in the morning on Friday for about 15%. We let the rest of the 5 run into my lunch hour, and I sold the rest at about 12:30. They were up 47% or so. But again, end of the day, as SPY approached my price target of 409.57, as you can see here, that is the 0.786 between the COVID 1.618 and 08 3.618. Those were up over 200%. So I'm more interested in looking back on Friday because it was a very reactive day. You did have this move to golden pocket, 406.92 to 406.30. On Thursday night, I tweeted out, "We did it, guys." We fucking did it. What did I tweet? I'll read it for you. At KOFib Onachi 406. So Thursday night, late Thursday night, I was watching futures. As you can see here, I have all the correlated prices on SPY labeled here on the futures prices. So late Thursday night, we tweeted out Tomorrow we will see 406.30 to 406.92 on SPY as futures has hit its equivalent COVID 1.618 to 08 3.618 golden pocket. We did it, guys. We fucking did it. Yada yada yada. Victory screech. So, late Thursday evening, we topped out here at about 409.4. Rejected. We touched this golden pocket here between the COVID 1.618 and 08 3.618, and I was like, yeah, it's a wrap. So that price point, that range, is equivalent to 406.30 to 406.92 on SPY. I knew it was a wrap. I knew we were going to continue to push up on SPY the next day, and we certainly did. So on SPY the next day, we had a nice move up to 406.92 to 406.30. We rejected around 406.92 at about 11:30. We got a push up, came back down, created support here at this golden pocket, and then we continued to rip to 409.57, the 0.786 between the 08 3.618 and COVID 1.618. At about, this was my intraday update from work. What time was that? So at 11:53 a.m. on Friday, I saw that we were basing on that 08 golden pocket, 406.92 to 406.30, and I let my Discord know, I let Twitter know. The next level above is 409.57. If we do continue to break out above 406.30 to 406.92. Sure enough, by end of day, we came to a screeching halt at 409.57. We actually closing price was 409.39. We topped out at about 409.76 in after hours. Pretty fucking close to 409.57. So that was Friday. Again, it brought everything full circle. Some of you congratulated me on the call. I appreciate it. I work hard, and I've been trading these levels since last summer. So some of you ask if I add levels to my chart, if anything is different. The answer is no. If you've been following me on Twitter since maybe May of 2022, everything is the same. I call this the historical golden ratio roadmap. It all started on SPX when I looked back to 1873. I was watching the Panic of 1873 levels all the way up to the 11.618 extension, and I said, wait a minute, this is too clean. These reactions at golden ratio are way too clean. There's something here. I started to dive in deeper to each separate market event, and I saw a lot of confluence between each separate market event's golden ratio, and I decided to roll with it. So this SPY chart that you're seeing here, this particular one is just the COVID and 08 levels and the micros between the COVID and 08 levels. So that's a little background. Month of March, the underlyings did really well. Congratulations to anyone that's been following me on NVIDIA since December, because we've just fucking killed it. Watch my other videos. I'm not going to do this again, but on January 20th, 2023, I called for the 13.618 extension, price point 28204. That was my end of month target for March. We did come just shy of it. We closed at 277.77 on Friday. We hit an intraday high of 278.34. But yeah, this pattern played out beautifully. I recognized a macro inverse head and shoulders forming back in December, and we've been playing it ever since, between the 12 and the 11, the 13 and the 12, etc. Apple, we hit the end of month target on Friday. End of month target was 164.83. And we closed, hi Rich, we hit a high of 165 even on Friday. We closed at 164.90. So end of month target on Apple was hit. It's fucking beautiful. This is actually the first time since Friday that I actually looked at the Apple chart. It's nice to see that we hit that end of month target. Add it to the fucking list. We called for $124.64 back on August 28th on Apple. We certainly hit $124.64. We got the reactive bounce off that 6.618 extension on Apple, and we just been playing upside ever since January. Tesla came short of the end of month target at $220.22. Friday we closed at 207.46, so about $13 short, but that is certainly okay because we've just been crushing the calls on Tesla ever since we called for 108 downside back on December 1st. Another retracement to the 6.618 extension. Same thing as Apple. We've just been playing upside ever since. We played a bunch of entries off this golden pocket between the 7 and the 6.618 extension at 171.87 down to 168.02. This is a great entry point. And yeah, that's fucking Tesla, guys. Meta. Meta exceeded the end of month target, 206.48. It hit a high of 208.09 on Friday. And if you have been watching my other videos, I've been talking about the next move on Meta. The next target is 257.86. That is the 0.236 between the 3.618 and 2.618 extensions. So price point 257.86. Watch my last video. Meta, the plan was and still is to play a rejection off of 223, 224-ish. This supply here creates support back at 206.48, which was the end of month target, and then I'll have in 250 strike calls. Expiry to be determined. It depends on how long this takes to play out. Or of course we might put that plan on the back burner if 206.48 doesn't hold up. It's really all about what the market gives us. There's really no way to determine exactly what it's going to do. This could certainly dip below 206.48. It's not going to be to the penny. You do have to give these levels a little bit of room. Nothing's going to be perfect, although sometimes it is a penny bounce. It's pretty incredible to watch. But needless to say, we're on to the next move on Meta. So we're going to be looking for that push up to 224-ish, pull back to 206.48 support, and then hop in those 250 strike calls in the near future. Microsoft exceeded its end of month target of 284.84. It was having a real good time at 284.84 towards the end of the month. We hit a high of 288.81. Great move on Microsoft. So end of month target hit. The plan on Microsoft is to hop in 298 strike calls, or 298.57 is the next level on Microsoft. That is the 0.236 between the COVID 3.618 and 2.618 on Microsoft. And we're actually almost at this supply here, back from August of 2022. So we were at a high of about 293.86 back in August. We're at 288.30 as of Friday. So pretty close there. We're going to be playing a rejection at that high of August 2022. Again, same thing. We're hoping for support at 284.84. And then hopping in calls for the next price target of 298.57 in the near future. Again, could dip below 284.84. We're going to play it by ear. This is just a hypothetical. What if we find support at 284.84 after retesting these highs from August of 2022? I think this will be a pretty obvious rejection point, and hopefully we find support of that 2.618 for the next play. Netflix. So Netflix, end of month target for the downside was 256.88. We smashed those 300 strike puts on this rejection at Golden Pocket between the 5.618 and 4.618 in February. We hopped in those 300 strike puts for mid-March, and they went in the money by about $16 by March 10th. Hit a low of 285.67, it looks like. We were hoping for 256.88 for those looking to hold those puts. There were a few of you that were in those, but it did get that bounce off of most local demand here from December of 2022. So in my most recent videos, I was pretty indecisive on Netflix and what it was going to do here. As you can see, it was rejecting on Monday, the 27th, at about 336 after that bounce from 286 in the previous weeks. You had that little bit of retracement back down at about 320-ish, and you did catch support. The whole market continued to go up. So I started talking about a potential move back to this golden pocket between 366.07 and 350.91, where we played that rejection to get in those 300 strike puts. That's kind of what's going on here. You didn't hit it quite to the T yet, but you're sitting at about 345.57. You're almost there. I'll be looking for another rejection at this golden pocket between the 5 and the 4 on Netflix. If we look at MACD, that's a very strong signal on MACD on the daily. RSI is pointing sky high. You're almost in overbought territory, so I'm assuming that Netflix is going to have another pullback once it bounces fully to this golden pocket here, 366.07 down to 350.91. Will it be a hard rejection? It's hard to say. Again, MACD pretty strong. Weekly is curling up towards the signal line. This could be a pretty strong signal here, but this still looks kind of bear flaggish to me on Netflix. I think if you do reject again, it's going to be a pretty decent move down. I think the psychological number of 300 could be revisited, or maybe even that's when that 256.88 price target is hit off this rejection, the second rejection here. So I'll be keeping my eyes on Netflix. The monthly signal line cross, first signal line cross on the monthly since 2021. So we'll see what happens with Netflix. Bull case scenario, if you were to break out above 366.07, you could easily retest all-time highs, the 5.618 at 581.39. I'm not saying that's going to happen. I don't think it's going to. If we're talking bear market, bull market, are we in a bull market? Are we in a bear market still? I don't think anyone fucking knows. But I think Netflix could easily fill these gaps if you do break up above 366.07. So this channel here is going to be major. So watch 366.07 down to 350.91. Watch how price reacts at those levels and play it from here. I'd say above 366.07, hop in 400 strike calls. The next price point above that golden pocket is 438.16. A rejection at golden pocket again, and I'd be hopping in 300 strike puts, or if I was feeling ambitious, I might hop in some leaps for 250. I think it'll be another quick move down or a quick move up. What else? It's pretty much a recap of everything. I'm repeating myself once again. I've said the same thing all March long. And again, I invite you to watch my most recent videos. But let's take a look at the S&P again and see where we're headed in the near future, in the coming weeks. We just started a new month, Q2. We're going to see what's going on. We're not going to try to pull out the crystal ball here and say this or that is going to happen on this day. I think that's silliness. But we can get a pretty good idea of where we're going this week. So you're rejecting at 409.57, give or take a few pennies. As of after hours close on Friday, the S&P, the SPY ETF, sits at 409.76. So you're actually above this 0.786 here, 0.786 between the COVID 1.618 at 413.75 and the 08 3.618 at 39424. If you look at the daily, sorry, excuse my arrows, I was explaining something to someone over the weekend, how I gauge momentum. So you had that strong signal line cross on MACD on Tuesday the 21st, and then RSI was starting to cross its 200 SMA. RSI is pointing straight to the sky on the daily. MACD is nowhere near its signal line. Lots of divergence here. So I think 413.75 certainly is the next move in the coming weeks. How quick it's going to happen, who fucking knows. As far as momentum from last week goes, not considering any news, I think this can happen pretty quick, and we're really right there. This is only another 1.1% day. It's about another normal green day on the S&P. So it could happen this week. It could happen very quick. You've broken out above pretty much all resistance. There's really not much resistance here relative to the most recent price action from March. So you're above that rejection at 406.92 to 406.30 back on Monday, March 6th, and also February 17th. So this range here is the next battle, right? But I will say 413.75, as I did in my last video. If we didn't hit it by the end of the month, we came close on Friday. But first week of April, I think this can certainly happen. As far as a pullback goes, futures currently red 0.27%. The news says that it's about the Saudi oil production cut coming in May. They're cutting 500,000 barrels of oil from their production. I think it's a debate whether oil prices truly affect the stock market in tandem. I think some people have different opinions on all that. Personally, I don't see much correlation between the price fluctuations of crude and the S&P, and I don't think you can put a definitive okay, if crude moves this way, SPY or the S&P 500 moves that way, vice versa. So I'm not gonna pay much attention to that now. It's only April 2nd. It's not coming until May, and futures really haven't reacted that negatively. We're having a normal pullback midway through this futures session, red 0.27%. 409.57 on SPY is 412025 on futures. We sit at 4126.75. So we're still above our level here. And ideally, we'd be looking for support at 4120.25 on futures. That would render support at 409.57 on SPY tomorrow. But we've had a really good week, so I am anticipating a little bit of pullback. I think it's safe to say that we could see a pullback to 406.92 to 406.30 tomorrow if we don't get a continuation straight to 413.75. So I'm going to say support at 406.30 to 406.92. Again, resistance becomes support, support becomes resistance. So resistance is now support at 406.92 to 406.30. From the closing price on Friday, that'll be about a 0.7% move down to 406.92 to 406.30. Resistance, obvious resistance, 413.75, which would be about a 1% move up to 413.75. Now, I signaled for 428 strike calls on SPY on Friday. That is what I have labeled with a star, target 2. This is the 0.382 between the 08 4.618 and 08 3.618. So price points, excuse the clutter, price points 48466 down to 39424. That is the 0.382 at 428.78. That is where we rejected back on Monday, August 15th, give or take a couple dollars. And I think that is our true next move up. I'm not saying you won't have some chop here in this range. Once you establish a touch of 413.75, the COVID 1.618, you know, I think you'll definitely have some resistance here. Trade sideways a bit, blah, blah, blah. But I think you're going to continue fairly quickly to 428.78 and retest that supply from August 15th of 2022. So I signaled for 428s on Friday. They were up. What time did I signal? Let's see. See how good we are. So on Friday at 1:43 p.m., I signaled for 428 strike calls on SPY. April 28th expiry, 85 cents a contract or $85 a contract. By close, they were up 35%. So they were already doing well on that push up to 409.57 from 2 p.m. on into close. So if you hopped in on those, you could have taken profit by the end of the day and not held them any longer if you wanted to. But I am convicted in that move. I think once we break through resistance at 413.75, it's going to be a clear shot up to 428.78. I'm going to be holding these contracts, probably until at least April 15th. Again, they were up 35% by close, so I'm probably going to secure profit if we do start to dip. I'll probably sell them if they dip below 15% in the green, and then look for a re-entry on a bounce off 406.9 to 406.30, or maybe we just establish support at 409.57. We might be done with this golden pocket, what I have labeled support. Maybe we don't even revisit it. Maybe we don't dip below 409.57. On futures, again, red 0.26%, still above the equivalent price on SPY at 409.57, price point 4120.25. It's about 11:33 p.m. And it looks like a bit of a bull flag forming. So we might just fucking rip. We might rip. So I mean, guys, you don't know. You have to have the expectations, have the plan. You have two plans. It's really very simple. You have a plan for the upside, a plan for the downside, and then you react. You have levels set in stone, and you take your emotions out of it. Obviously, I want to see the market do well. I want to see the S&P 500 go up. I don't want to see it crash. There's a lot of doomers that just want to see the fucking world burn. I'm not one of them. I want to see the S&P do well. I want to see the United States do well. So I'm sure there's going to be people boboing it up this week. Well, we're overbought. We're overbought. We're really not overbought, guys. We're really not. We're not even overbought in the daily. If we look at the weekly, that's futures. Get out of here, advertisement. If we look at the weekly, you know, the macro time frames where the signals are stronger, we're nowhere near overbought. We're about to cross RSI's 200 SMA, and we just got that weekly signal line cross on Monday, March 20th, and it looks pretty strong to me. I know people are talking about low volume this, low volume that. When I look at volume, what I see, I look at the monthly, and I see the highest monthly volume since March of 2021 is what I see. 2.5 billion back in January, 2.4 billion, and then March of 2021 we had 2.4 billion. So I see the highest monthly volume that we've seen since March of 2021. So that's my take on that. I'm not a volume trader. I am a momentum trader, and I use Fibonacci to gauge momentum along with very simple indicators like MACD and RSI. I think less is more. I think overcomplicating things hurts the trader, and I try to keep it as simple as possible. As confusing and complicated all this may look, as confusing and complicated saying, oh, we're at the 0.786 between the 08 3.618 and Kobe 1.618, it's really not confusing. It's a simple retracement, two retracements, and two of the most widely used momentum indicators, classic momentum, that traders use. So I'll leave it at that. I'm not going to go over the targets for the underlines for April just yet, as some of them have not hit the monthly target for March. So quickly on NVIDIA, 28204, look for that price point to be hit this week. Look for a potential rejection there. I'm not saying a strong rejection and this thing's going to sell off into the depths of hell, but this pattern started on the 28th of March in 2022, give or take a day or two, and we've come full circle at this 13.618 price point at 28204. So expect a rejection of some sort at that price point. Everyone's going to be looking at the chart. Everyone's going to see that supply there, and that's going to be where shorts hop in on NVIDIA. Same thing on Apple. You know, the next move up is above all-time highs, or a retest of all-time highs above 16483. My next level is this $195.94 price point on Apple. That would be an all-time high. Tesla, still waiting for 220.22 to be hit, and then we'll start talking about the levels between the 8.618 and 7.618. Meta, I already went over the game plan for that. 224 rejection, find support at 206.48, give or take $1 or $2, and then hop in 250 strike calls. Microsoft, same thing, 298.57. Next price target above 284.84. You're at that supply from August 15th of 2022. You're just right there. So use your best judgment. Again, everyone's looking at the same charts. Everyone has relatively the same levels. So the market moves not because the market is some, not because there's a puppeteer doing this or that with it and some supercomputer is trying to fuck you out of your position and get retail long when they should be short. It's because the market moves with the people. Does that make sense? Like, if everyone's buying at the same levels and everyone's selling at the same levels, what do you think's going to happen? If everyone's selling at the same levels because, oh, everyone has the same chart and everyone can see that's a pretty logical supply zone, the momentum of the sells is going to be higher because everyone's doing the same fucking thing. Same thing with buys. It's why Fibonacci works, actually. It's because everyone has roughly the same levels. So the more people that are using the same indicators and the same trading strategies, the better the trading strategies work because everyone's fucking doing it. Everyone's pushing that momentum. It's not magic. Netflix, again, look for a rejection at 366.07 down to 350.91. Above 366.07, next target is 438.16. Below this golden pocket, another rejection, target downside. I'm just going to reaffirm 256.88. Last but not least, we'll take a look at AMC because it's what everyone fucking cares about still. Daily, MACD signal line cross, bullish fashion. On Friday, AMC was up 0.8%. Really not that impressive of a day. RSI curling up above its 200 SMA. This could continue. I'm neutral here, as I said in my last videos, between $5.20 and $4.83. I'm neutral. I have my bull case and my bull case. Bull case, $7.11 for target 1, $11.61 for target 2, on a breakout above $5.20. A breakdown, another breakdown below 483, target downside is 281, which is where we rejected back in November of 2020 before we went down to $1 and some change, and then we squeezed in January. All these levels are like the all-time macro levels. You can see here, this is where the fibs are drawn from. Essentially 2013 to 2021 low. It's what we've been playing off of since January of 2020. And they work. So, neutral here. Watch a breakout above $5.20. Breakdown below $4.83. Look at the 30-minute. That's a big arrow. What's going on? You know how I love my 30-minute. 30-minute MACD, bullish signal line cross on Friday. Pretty strong histogram signal. And RSI pointing straight to the sky. Looks like a breakout should occur on the 30-minute. So I think you could retest $5.20 early this week. Back on the 28th, you hit a high of $5.49. So, you know, use local price action as supply and demand, and then pay attention to these levels that I am providing you. Yeah. The dollar. What's the dollar doing on this oil news? Green 0.4%, really not that exciting. That's the 2 hour. We'll go to the daily. Daily MACD starting to curl up. RSI pointing up. We'll go to the 4 hour. Bullish signal line cross. Friday at about 3 p.m. Dollar gains as inflation worries resurface after OPEC plus surprise. Blah, 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 blah. Blah, blah, blah. Fuck the news. We're bound to see a little bit of pullback. Anyways. Really, like, this blows my mind. Blows my mind. The Bobos are going to be in full force this week. They're going to be oil experts now. Watch out for the oil experts. And they're going to be all over Twitter. These fucking experts on oil. They can't even look at crude and the S&P together and see that there's very little correlation in price fluctuation. But they'll tell you if oil goes up, S&P goes down, the market's going to crash again. It's fucking hilarious. That's what's coming. But not until May. All the way leading up till May. So if we start to fucking rip again this week and into April, late April, they're going to have that doomsday clock for May when Saudi cuts 500,000 barrels of oil from their production. It's going to be marked on the calendar in big red X. Last look at futures, and then I'm signing off. Red 0.3%. Oh my god, buy puts. Still above 412025. 30-minute. Looking pretty bearish. I'll just say it now. I don't think this will hold up overnight. I think this would definitely break. So on futures, price point 412025, equivalent of 40957 on SPY. I think most likely you see a pullback to 40692 to 40630 tomorrow on SPY. So follow the support. About a 0.7% red day. Anything lower than that, you do have this uptrend support. Call it moving support. Right here, which is from the low in October of 2022, where we had that 5% down, 5% up day, to this wick down to 37493, the golden pocket between the 08 3.618 and high of 2020, back on December 22nd, Thursday. Extended right. Wait, is that it? Yes, that is it. Wait, what's going on? Trading view. What are you doing? They moved my. Oh, there we go. See, it moves. Depending on the time frame. So yeah, I'll just say it now. I think we fall to 406.90 to 406.30 tomorrow. Test that support. It's the most logical move. So 0.7, 0.8% red tomorrow. No biggie. If you want, I don't even think you're going to have time to hop in puts tomorrow for this move. You might be able to hop in calls off the bounce at 406.92 to 406.30. And maybe play 409 strike calls tomorrow. I think this move will come very early. We might even see that in pre-market with an open at this level. Again, these levels, give it a little room. You can certainly dip below 406.30. Take a fucking screenshot of this video. Look at my Twitter feed. These charts are all over it. Same levels, same friends if you're looking for me. Do I really have to go over this? Below 406.30, that golden pocket, the next level down is 40169 and 39884. Then the 08 3.618 at 39424. Use your brain, and I'll talk to you tomorrow sometime. Have a good night.